Right, so I think we'll crack on, as I'm sure people got better things to do on a Friday afternoon for us, and Friday morning, I think it's for you, isn't it, Billy?
Yes, it is. It's 10 a.m.
10, lovely. So, right, again, as this is our, I think our 6th webinar in the series of the COVID-19 coming out of the lockdown series, and we thought we'd do the Profit First webinar. And before we get cracking on, just a bit of housekeeping. I'm sure those of you have already been part of our webinars used to this. Just any questions that you have as you go through the webinar, please put them in the box. It might actually be worth waiting towards the end, because we have actually got a common questions slide at the end that the same type of questions do tend to crop up. So we have tried to cover them at the end. So maybe to save you typing anything in, maybe if there's anything that we haven't covered, then by all means answer those in the Q&A section. So that's the Q&A. Again, just a bit of background of Raffingers. These are our core values that we abide by every day, and I think this Profit First covers 2 of them. The first and the last one, make a positive impact, which definitely does to businesses, and then dare to be bold, something that's a bit different that not many accountants or business providers help businesses with. And they're the other 3: get it done, deliver to a high standard, and always making time. And obviously giving out accounting advice at the same time. Again, so this is just our services that we provide. As you can see, our cash flow improvement powered by Profit First is one of them, which obviously we're talking about today. And quite a few of these others we've already covered in previous webinars. So that's just a brief background of Raffingers. Who we are, if you don't already know, I'm Lee Manning, one of the partners at Raffingers. And there's a sort of quick bio there. So read away. Billy Ann, I think, is the most important one. Billy Ann has been part of the Certified Profit First Professional since 2014, actually living in Oklahoma, where it's 90 degrees, I understand. So I'm going to have to stop moaning about it being sort of mid-80s here. And obviously she's got much better air conditioning in her office than we have at home on lockdown. So, and Billy obviously brings 20 years of experience, bookkeeping experience, to small and medium-sized businesses, helping them predominantly with Profit First. So the idea is that I'm going to now pass over to Billy. I will pass over control of the screen so you can control the PowerPoint, which you should be able to, and fire away. Over to you, Billy.
All right, thanks so much, Lee. And oh, yep, here we go. So welcome everyone. I'm so happy to be here and sharing this with you today. I wanted to start by asking 3 questions, and I want to give you guys a minute or 2 to think about these, just really give these some thought. And the first question is, are you tired of working harder and not seeing the results in your bank account? So give that some thought. Do you often find yourself wondering where all your cash is going? So you see your reports and you see that sales are going up, but then you look at your bank account balance and the money's not there. And then the third question, are you constantly chasing after that one big sale or that one big deal that will make everything better in your business? So what I'm going to do is actually I'm going to ask Lee to put up a little poll on your screen to answer those questions. Lee, do you have access again? There you go. So if you can identify with the 3 questions, click yes. If you can't, click no. We'll give you a few seconds to answer that. Lee, I don't know if you can see the results as they're coming in.
Yeah, I'll publish it once people have finished.
Okay, great. Yeah, we'll just give a few more seconds to answer that before we progress on. So get your answers in.
Yep, so I've got most people voted now. So if I end the poll and share the results.
Yeah, so 83% are saying yes, that you can identify with those 3 questions. Yeah, we're go. So 3 yeses. We thought so. That's typically what happens when we answer or when we ask these questions. Pretty much all the entrepreneurs we meet with seem to face these same struggles. So you're working your ass off. You're seeing very little financial reward from that hard work. If right now you were to write down how many hours you put into your work and the money you get in return, you probably would fit into that above box too. In fact, we've worked with business owners who, unfortunately, when they do the calculation, realize that they're making less than the minimum wage. When it comes to running a business, decisions like how much you're going to pay yourself, when to hire staff, how to handle cash flow, regardless of how savvy you are as an entrepreneur, that can leave you doubting your ability to run a healthy business. And it's even more frustrating because you know there's an answer out there, but you're just not finding it. So clarity is essential. In every financial choice you make, you have to have clarity about what to do next. Our proven process that we're going to share with you has helped business owners exactly like you simplify the business end of your office and start getting the profits that you deserve. You actually deserve to get paid well for your business and to have a profitable business. So what's the problem? Why is there this disconnect between what's happening and what you've been taught? The problem is we've been working with a broken formula. And that broken formula is sales minus expenses equals profit. So from an accounting standpoint and from a logical standpoint, that's a completely okay formula. But it focuses only on your numbers and it ignores the human behavior that is happening behind those numbers as they're flowing through your financials. And the reason that that is working against you is because of something called Parkinson's law. What Parkinson's law is, it was originally written about time, but it extends to any resource that you consume. Parkinson's law says that our demand upon a resource tends to expand to match the supply of that resource. So, I mean, think of it like deadlines. I know for me, I had an hour to get a bunch of things done this morning, and I got them all done in an hour. If I'd had 3 hours to get them all done this morning, it would have taken me 3 hours to get it all done. So while we know we should read our P&L, our cash flow, our balance sheets regularly, conduct our financial analyses, reconcile our ledgers, we just don't do it. We don't do it, and instead we check our bank account balance online constantly. What we see in our bank account balance dictates our behavior. So Parkinson's law dictates that as deposits increase, so does our spending, and vice versa. The challenge is when you leave profit as a leftover, there's nothing left over because you've used it all. You've looked at your bank account balance and said, oh, I have 10,000, I can spend 10,000. If you take your profit first though, your natural behavior of checking your bank balance becomes your biggest asset instead of your biggest liability. So the fix is pretty simple. Always take your profit first. Parkinson's law becomes your ally when you take that profit first. You are forced to grow your business off of the remainder. So it doesn't mean that you're starving your business for resources. It just means that you are forcing the behavior to be more efficient and more effective. In the past, profit was a leftover. When you use profit first, expenses are forced to adjust. And bank balance accounting, which all of us do. I mean, I'm a bookkeeper and I will admit I make decisions based on my bank account balance, even though I know I quote unquote shouldn't. Now it's a highly effective method of managing your finances rather than a liability. With that, I'm going to hand it back over to Lee.
Okay, yeah, let's do that. Let me take control of the screen. All right, guys, thanks for that, Billy. Excellent intro. So this is what we initially do with clients where we're looking to set up the bank account. So the idea is obviously to set up 5 bank accounts. And the idea is that these bank accounts are with your existing bank. And in the UK, there's not normally a charge for setting up existing bank accounts in the same branch under the same company numbers, like opening up savings accounts. So the idea is obviously you have your income account, obviously your income's going into that, your profit account, your taxes account, and owner's comp, which is your owner's pay, which is either your salary or dividends, and any tax that goes with that salary or dividend, and your OPEX is your operating expenses. Now, Bank 2, this is something that Profit First recommends, and it's nice to have. It's not essential. I think Billy will most agree that this is to try to remove temptation away from people to raid the profit and taxes account. If it's in a second bank account, it's somewhere where it's really difficult to actually access those funds, then it does make sense that you should open up a second account, maybe an internet bank account. There's many internet banks now where you can actually put this money, give somebody the login details that you can only then access when the profit every quarter is due to you and the taxes are due. So they're the bank accounts that need to set up. So that has to be done at stage 1. What we then do at stage 2 is determine what's called the caps, your current allocation percentages. So what we do is sit down and work out, right, what is the current profit percentage on real revenue? And again, with Profit First, we look at real revenue as opposed to sales. Real revenue is the sales less direct costs. So anything that's attributable to the sale, i.e. raw materials or goods that you're buying to resell, you would deduct those, and you're working from a real revenue figure. So you could have a business turning over £1 million. The cost of goods to do with those sales are maybe like £800,000. So all the percentages are worked out on the £200,000, the real revenue figure, because that's obviously what figures that that matter. Sales are the total sales figure is not the important figure. So we then look at what the caps are. So we've got profit 1%, the taxes are 20%, our owner's comp is 50%, and our OPEX cap is 29% of the real revenue. And then once we've determined what we actually are doing for the last, normally we look at the last 2 or 3 years figures and any management accounts that we've got up to date to get as accurate figure as possible. Then that enables us to do stage 3, which is then look at our target allocation percentages. So this is, again, really important that we determine, we discuss, we make sure that we're not being over cautious and maybe again not being over realistic on our percentages. So we look and we say that as this business, for this business, we should be having at least a 10% allocation for our profit. Our taxes are fine at 20%. Our owner's comp, okay, is a little bit low at the moment. We should be aiming at 55%. And obviously, to enable us to pay the increase in the profit account and the owner's comp account, we've got to reduce it from somewhere. The only place we can reduce it is from your OPEX account. So we've got to have a 29%, we've got to reduce from 29 to 15%. Now, what we do, again, I think that this is guidance from Billy when we first started this with clients. We look at this on a 90-day world. So I think originally we did these allocations over 12 months. But what we found is that if we can slot it into 90 days, it's a lot more achievable, and 90 days is a lot obviously nearer than 12 months, and you can actually see the results. And then after 90 days, when you do the profit allocations, pay the taxes, we then have a review of our target allocation percentages, and we can then flex them and change them if we need to. So it's really good having that 90-day target, knowing that over the 12 months or even 24 months that we can eventually hit our targets here. So this is how we do the initial setup. And this is taken from the book, and this is basically a guide. So this is a guide that Profit First have looked at all the businesses that they deal with where they've got the real revenue. And as I explained to you what real revenue is before, so real revenue is your sort of gross profit loosely as your figure. And based on those figures, these are the percentages that they sort of recommend as a guide to start with. So with a couple of clients that I've worked with, we use this to start with, and we just see if it's achievable or not. If it's not achievable, then we just manipulate it to make sure that it is achievable going forward. Quite interesting. Obviously, the tax we've got to look at. I think this is based on the US figures. So with the tax here in the UK and the VAT, we obviously make sure that the tax is the actual figures that we know that's applicable here. But quite interesting what those figures are going forward. So that's the guide we use. And then what we do, and this is really important as well, and I think this is sort of a given with the Profit First system. If you need to agree a date, 2 dates within the month, and that's why it's called the 10, the 25th, 25 rule. So on the 10th and the 25th of each month, you actually do the allocations and you look at your figures within the business. So all the income goes directly into the income account, and then you transfer money from your income account to your other accounts based on the taps, and that's what we was doing before. So you £5,000 income has come in for the previous 2 weeks, and then what you do based on the percentages that we've agreed, you allocate and you actually move the money from your main income account to your profit account, the tax account, owner's comp, and your OPEX account. And as you can see there, it shows what those accounts are meant to be doing. So the tax account obviously is the savings to pay the tax, owner's comp is your personal bank account, OPEX is obviously paying all the bills that are coming through, and the profit account, and we can talk about what we do with the profit account shortly. And also the idea with this is that you need to then get into a habit of not paying your bills ad hoc and on a whim. So the idea is that you speak to your suppliers, you look at your direct debits that are going out and try and make sure they're all done on the 10th or the 25th of the month. So you speak to suppliers and say, look, new way of paying you, this is what's going to happen. So you know on those days you're going to need an hour that day to deal with the transfers and to pay all your bills. So really important. Without that 10-25 rule, again, the system doesn't work. If you want to do this on an ad hoc basis, when you find half an hour to do it, it just doesn't work. The whole system just falls down. So it's really important that you have the time and the mindset and the sort of free time to actually go ahead and do that on those days. And then what happens is on the quarterly dates, there's a quarterly routine. So as the previous slide, that you've got the profit in your profit account. So every quarter, the idea is that, I don't think the arrows have come out very clear. So the profit in the amount of money in your profit account, the idea is that you actually pay yourself a bonus. So every quarter you pay yourself a dividend bonus, or even through the salary, and up to about 50% of what's in your profit account. And the balance just stays there as a nest egg and as a savings account for anything going forward that you might need. So you actually see in the benefit yourself personally of 50% of what you're saving in your profit account. Obviously the taxes get paid each quarter, and then obviously we review the allocation percentages to make sure we're on track and make sure that we're not falling behind. And also I think Billy will agree with us as well, is that when I've done this in the past, is that the idea is to come up with small percentages at the beginning. So I think the whole idea is to get into a mindset, a different way of working, different way of paying your bills, and a different way of running your bank accounts. If you start with really small incremental percentage changes, you just get used to the system working. And then after maybe the first quarter, we can then really ramp up those percentages, because if you go too high at the beginning and you can't make those allocations from the income account, and there's not enough money in your OPEX account to pay your operating expenses, you're just going to say the system doesn't work. I didn't think it was going to work, and you just leave it. So the idea is you really start small, and then you start building it up and building it up and building up, and it's amazing what difference that makes by starting with those small percentages. So to recap, phase one, the profit assessment that we do is looking at your company's financial trends the last 2 or 3 years, management accounts, to get to know what our current percentages are at the moment. At the same time, when we do that, you then go ahead and open up those bank accounts, get those bank accounts set up, even to the extent that you would open up a bank account called Profit, and if it's 10%, you will call it Profit 10%. So it's really clear when you look on your online banking system what that means. And then phase 3 is then obviously quarterly. We look at making sure that everything is working okay, there's no issues, and then maybe ramping up those percentages to make obviously the business a lot more efficient. And the whole point, not the whole point, but the whole thing with having Profit First professionals is just to have someone accountable. I've spoken to quite a few clients and even potential clients who want to implement this, is that they've come back sort of months later and say, look, I tried to do it, but I just didn't have the time. I didn't have the accountability to actually implement some of this, and it's just fallen away. I do need somebody just every 2 weeks, even just a month, just to be accountable, to maybe have a sounding board, just to make sure I'm on the right tracks. And that's where obviously we come in, and to help you manage it, make sure that you actually are doing what you're meant to be doing. And I have had instances where I've sat with clients and actually watched them actually do the bank transfers from the income account to all the other banks. We've looked at other issues that they maybe had within the business, and just having someone there who obviously knows the system pretty well as a backup. So that's what we do as Profit First professionals, and I'd imagine Billy will second that from the clients that she's worked with, that it does seem to work when you have got people there helping you. Is that right? Yeah, cool.
Yeah, absolutely. It's kind of like working with a fitness trainer. You know, you can buy the gym membership and go yourself, but you're going to get better results quicker if you work with a trainer.
Should have said that at the beginning. I think that was a very good way of putting it. So this is Profit First. So if some of you haven't read the book, this is sort of a bit of an intro of the book. What I will do is just a really quick poll again, just to see it'd be quite interesting. Just a couple of seconds, guys, if you've read the book. Just gives me a feel for then maybe where the questions are going to be going towards the end, where we got the Q&A. That's quite interesting. So Billy, that might help when we're doing some Q&A at the end. 71% haven't read the book. So quite a few people are quite interested. Hopefully we've covered, which is quite an in-depth book in sort of about 20 minutes. So I'm sure there's going to be quite a few questions coming off, but let me get rid of the poll. So yeah, that's the book. Highly recommend on Amazon. A lot of people end up listen to it, I think. Does Mike do the Audible himself, Billy?
Yes, he does. And it's interesting because even if you read the book, he tends to kind of go off script a little bit and drop little nuggets in there. So it's worth listening and reading. Yes,
I'm finding a lot of people have listened to it rather than read it. So definitely a plug there. And I thought this will be quite interesting as a case study on a client. So this is maybe putting it all together, showing how this has worked for a client of ours. So basically it was a retail shop selling secondhand instruments and a repair center. So that was quite interesting. He had two product lines in essence in his business. So you can imagine earning good profits on the musical instruments and not such good profits on the repair center. He'd already set up his nominated bank accounts, but had not implemented the system. So quite interesting, his pain points. He literally had no money to pay tax, and he was, every time a tax bill came up, he was borrowing money and getting himself in a lot of debt trying to clear the tax, which obviously not a good thing because the tax does not go away. Did not pay himself enough. He was working 12, 13 hours days. Okay, a decent salary, but not enough for the hours he was putting in. He was completely out of control. He didn't know where he was with the finances. And quite interestingly, he had bought at auction some really decent bits of equipment, and he was finding he was getting really good margins where he was selling at the auctions, but he never had sufficient funds when the auctions came around. I think it was twice a year, to actually go and buy what he wanted. So he was getting frustrated that he knew he could have increased the profit within his business, but he just didn't have the cash. So what we did, we actually worked through his profit assessment. We did take quite a bit of time really to get to the bottom of the target allocation percentages. And what we found is that he had to reduce his overhead percentages quite significantly, and what that sort of forced him to do was to review his overheads. So he had to go through line by line through his bank statements and look at what costs that he could just drop where subscriptions were coming out and he was paying for bills that he didn't really particularly need and wouldn't make any difference to the business continuing to trade. So he stopped them. He looked at alternative suppliers, for example, the light and heat, the utility bills, anything like that. He could then shop around. And he obviously then, there were certain costs that he couldn't really stop, like the rates or the rent for the shop. So there were certain things, by just doing that exercise, saved him 15 grand, because he hadn't done it for so long, because he'd really sort of been sucked into running the business as opposed to actually working on the business. And then that was still not enough. So when we looked at that, the overhead savings were just not enough to give him the profit and to put the tax money away into that account. So then we started talking about increasing prices. He hadn't done his increase his prices for absolutely years. So overnight, I think actually the next day he actually put his prices up. I think it was 5%, just to see what was going on, see what the reaction was, and he got no adverse reaction whatsoever. So the next time I had a chat with him, he said, "Oh, it went really well." He then 2 weeks later upped him to 10%. So straight away he'd put on another 10 grand straight on the profit by increasing his prices and reviewing his overheads. And I don't think he would have done that without looking at profit first, looking at percentages, and having me sort of there to be accountable to. So and then we was meeting online every 2 weeks to ensure the allocations were done. And that the tax were achievable. So yeah, every 2 weeks we make sure that he was putting that money away, especially the tax account, which he was doing. And he made some really tough decisions, because he knew he had to then make sure that he was keeping to those percentages, to the extent that he, I think, got rid of one of the employees left, and he said he would normally have replaced that person, but he didn't. He said he wanted to work in the business, make it more efficient, and build up the cash reserves to have the 3 months. I think in the book they suggest to have at least 3 months cash reserves to cover your overheads if you never sold anything again for 3 months. And then he said once he had those reserves, then he would go out and employ somebody again. So he was just making some much better financial decisions. And the last one, which he got quite excited about, he actually set up an auction account, and he was putting money away every 2 weeks into that auction account, because then the next auction came around, he had 3 or 4 grand in there, went and bought what he wanted at auction. So it worked really well. And the results were that he had funds to pay taxes when they fell due. He was paying himself more, which was great. And he felt a bit, when the profit allocations every quarter came around, he was taking some money out for himself. And he said for the first time he was in control of the business rather than the business controlling him, which I think was a massive breakthrough. So I think that's a really good case study. Obviously, the business needed a little bit of help, which I think the Profit First system just gave that to him, and he was very, very committed to actually make the changes, which was important. He kept to those 2 week meetings religiously, and I think that was really important for the system to work. Excellent. So that's me done. So I'm going to share my screen back to you, Billy.
All right, thanks, Lee. And I think a really telling thing in the case study is the client had actually set up the accounts, but they hadn't implemented the system yet. It took the assistance of a Profit First professional to get the results that he truly wanted and needed for his business. So, all right, so the key benefits of the system, I mean, I think Lee just pretty much nailed it with that case study, but we'll just recap that. When you implement Profit First, you rest easy knowing you're equipped and prepared for any financial scenario that comes your way. Pointing back to what's recently happened around the world with the COVID-19 thing, those who have implemented Profit First have weathered the storm better than those who have not. You finally receive a healthy return from your life's biggest investment. And this is an investment not only in money, but in time, and in some cases, your health and your relationships. So you really need to make sure that you're getting a healthy return for that as you begin to confidently and consistently pay yourself a healthy salary. And then you feel settled knowing that your business is running strong and that you're reaping the rewards, and that uncertainty of what is actually happening with the money in your business is gone. So the question to just ask yourself is it time for a change? So if you want to continue to work endlessly with little or no progress, or if you want to stay in the dark about your cash flow, if you want your business to stay dependent on that next big sale or one big sale to make everything better, then do nothing. Otherwise, work with Lee and his team to make profitability and cash clarity a reality in your business. So I wanted to address some common questions before we go to open Q&A, and I do see we already have a question in the queue, so that's exciting. But let's answer some common questions first. So the first question, if I'm running a new service like a music festival where I pay all the costs up front, how does Profit First work? I mean, ideally, we would love for you to cash fund your business to not have to take out any sort of debt, but knowing that that might not be necessary or might not be feasible, what you would do is make sure that as the money starts coming in, the revenues start coming in, that you pay off your debt first. And then the difference between what's left after you've paid off your debts or your opening expenses, that is your real revenue. And that's what you run through the Profit First system. So it wouldn't be a matter of, okay, I got 10,000 in, but I owe 30,000 in debt, so now I need to pay myself. No, you actually do need to pay the debt first to make sure that that doesn't become an ongoing issue. Another common question, and this is really common for businesses that have been up and running for a while. If I have some old supplier invoices outstanding to be paid when I start Profit First, how do I deal with those? Okay, so we didn't really go too much into the materials and subcontractors account, but that's a key element when you have a business with cost of goods. How do you handle that with Profit First? What a lot of businesses ultimately end up doing is they are paying old invoices with new sales, and that puts them in this constant cycle of always being behind and always being in debt. But the challenge is that's hidden until the sales slow down. And then you can really start seeing, oh my gosh, I've overspent. So if you have old supplier invoices, we consider that debt. Those don't come out of the materials and subcontractors account. Instead, we set up a separate debt eradication account, work out a payment plan with those suppliers to whittle those away. And then starting with your new sales and your new supplies that come in, those come out of your materials and subs or cost of goods account. The third question, more bank accounts will result in a lot more bookkeeping work. Is Profit First really worth the effort? So as a bookkeeper, that was actually my first thought when I heard about the Profit First system is, oh my gosh, one bank account's enough. Now you want me to reconcile 5. But really, when it's done properly, it doesn't result in much more bookkeeping work at all. In fact, I would argue that it makes the bookkeeping simpler, because what you do is you just make sure that all of your expenses come out of the OPEX account and the other bank accounts become holding accounts for your money. Kind of like envelopes. If you've ever heard of the envelope system of managing your personal cash, Profit First works the same way. So the additional bookkeeping work is minimal, literally 30 seconds per account to reconcile them every month, if even that, because it's transfers in and transfers out, no other activity. Why should I allocate money from the income account to the profit, tax, owner's comp, and OPEX accounts on the 10th and 25th instead of daily or as needed? So it can get really exciting when you're first starting Profit First. You see that money come into your income account. You think, oh, I want to go ahead and divvy that up. If you do it too often, if you do it daily, or if you do the allocations as needed, 2 things happen. Number 1, you stay reactive to your bank accounts, like overly reactive to your bank accounts. And number 2, you obscure the cash flow in your business. So when you actually wait and do it on a schedule, do your allocations on a schedule, you can start seeing the ebbs and flows of cash in your business. And it gives you a lot more clarity instead of kind of panicking of, oh my gosh, I don't know what's going on. Because my revenue is down, and especially in the retail world, when that happens, the inclination is I need to run a sale, which just kills your profitability and your profit margin. And it might not even be necessary. It could be typical flow. So the rhythm is really, really important. And then the last common question, where do I pull the money from if I don't have enough money to pay expenses from my operating expense account? You don't pull that money from anywhere. If your operating expenses are too high, you don't have enough money to pay those, that's your business screaming at you for attention and saying you have too many expenses and something has to change. Oh, any other questions? So I do see that we had a question in the Q&A, and if anyone else has questions, please type them in. But Kelsey asks, cost of sales such as courier fees, payment processing fees, and all other sorts of incidental fees, would you take this out of your revenue figure to give you real revenue, or would you allocate this as part of your OPEX spend? So Kelsey, for these specific things that you mentioned, those would be considered OpEx. You really only want true materials and subcontractors costs to go into your mats and subs account and be subtracted from your total revenue to give you your real revenue. The reason for this is there's no metric in Profit First to measure mats and subs, and it's really easy to obscure expenses up in that materials and subcontractors line and skew your real revenue and hurt your capability to determine what changes need to be made in your business. So unless it's a direct material cost or a direct subcontractor cost, then we do recommend putting it down into OpEx. And that's the only question I'm seeing.
Cool. I think that was, yeah, I think I'll take control back, I think. If there's any more, we'll just before we end, we'll just check to see if anyone's been typing in as we go through. It's obviously because we've done such a great presentation that they know what's going on. Oh, right, this is quite nice. So Mike, who wrote the book, has done a lovely testimonial for us, which I'll play. Hopefully you should be able to hear it. And he explains how Profit First can help business as well.
The most important element of any business is its profitability. In fact, profitability translates into sustainability. I suspect it's the reason you started your business in the first place. Well, you've come to the right site. Lee Manning and the team at Raffingers is certified in Profit First. In fact, they're one of the few firms in the UK that become certified in this methodology. My name is Mike McAllowitz. I am the author of Profit First. I'm proud to say that Lee and his team have become certified in this process and are ready to deliver it to you. So if you're serious about profitability, you come to the right place, just hire Raffingers.
And I didn't have to pay him a lot for that either. So it's very nice of him to do that. And I think that was your suggestion, Billy, I think, which was really great. Look out for the email after this webinar. So there will be a link in there that we do a free sort of consultation for a half hour, 45 minutes, just to go through the business and talk about Profit First, how it can help you in your business, a bit of a deep dive meeting with myself. So look out for that. And just to recap, I'm just checking there's no more questions. Yeah, to recap, so this is the 6th out of the 7th episodes of our webinar. We got our final one next week on Tuesday the 30th about the cloud technology. I think the cloud technology just wraps up everything that we've been discussing, and I think the cloud technology is really important if you're running Profit First. I think it'd be impossible to run Profit First without having QuickBooks Online or Xero or one of the cloud systems where you're doing bank transfers. If your bank feeds are coming in automatically and you've got bank rules set up, the bookkeeping, it literally does take seconds. If you haven't got that, yeah, my God, it will be a bit of a nightmare. So that's really important, I think, which is why we're talking about cloud technology. And also just not talking about Xero and QBO, it's then all the apps that link to those systems and the benefit and efficiency savings that you guys can get going to the cloud running your business. So that's the next session, which will be very interesting. I think that's it. So I'm just checking no more Q&A. Oh, there's one. Oh, someone sneaked one in there. Oh, okay. Thank you, Chris. It was more of a congratulations and telling us to have a lovely weekend. So it was very nice. Yeah, as I said, we can go into more detail. We normally do that in a deep dive. And what we found is that every business is different. Not one business is the same when you come to apply Profit First. So that's quite important. And also to reiterate, when you do want to implement this, you've got to be so motivated, find the time, prioritize your time to run this. And I guarantee you that the results will be really worth doing. So so thank you, Billy, for your time. Hopefully it doesn't get too much warmer out there. And I think I'm going to go now and have a beer and welcome the weekend in. So thank you very much, Billy. Speak to you soon.
Before we end, one more question did slip in. So Kelsey asked, what's the best way to track how you are reducing your OPEX? How do you know how much of a dent you are making in OPEX and what reports would you run? So that comes from an additional analysis. So that first step becomes an ongoing step, a new assessment to see, okay, how have you done? You'll also see it in your bank accounts. You'll be able to tell that you are reducing your operating expenses because you won't be running it all the way down to zero. You'll have more for profitability. So with that said, Lee, I think that a beer sounds like a wonderful idea. It's a little early for me, but have one for me.
Thanks, guys. Thanks for everyone who's joined. Speak to you soon. Thank you.
Thank you all.
Bye. Bye.